Hi guys, so welcome to a new video. In this one I'm going to be running through one of the previous videos I've done, which was about merge arbitrage on Tiffany and LVMH. That was about 6 weeks ago now. The reason I'm reviewing this is because recent news came out today that is really relevant to that trade, that investment. I just really want to have a look at, whether it had been profitable, whether it was a good idea, whether my logic was right. And that's, what I like to do, to review what I'd done before, to think logically about it, to kind of analyze it, to assess it, see where I could improve, see what went well, what didn't go well. Obviously, this wasn't a trade that I actually entered into because I wasn't looking for short-term plays, and this is a short-term play. But I think, it is successful. I think the data will show that. So if we jump in, an FT article from today talking about LVMH and Tiffany in talks to cut price per share, or the $16.6 billion deal. Obviously, it was just to sum up previous events. I went over them in my other video, but to sum them up, this deal was agreed back in November 2019. Obviously, the world was very different back then. A few months ago, LVMH came out and said, you know what, this isn't good enough anymore. We're out. We don't want to do a deal. Tiffany said, absolutely not. That's not acceptable. Sued them. I think there's countersuits now. It's got very complicated, very aggressive, very angry. I mean, you see in this article here, which was one of the original ones, LVMH is saying that it's just not a good enough business now, that it's suffered a lot throughout the pandemic. But you can see here that this was really an attempt to renegotiate. I mean, before this happened, they were trying to renegotiate, seeking to renegotiate the terms, to lower the price slightly. That's what they wanted to do. What it's happened here is it's just taken a few months for them to sit back down at that table, to negotiate again. And now they are. I think a deal is going to be hashed out now. In this article, it talks about the prices. The original price was $135 a share. LVMH wanted to fall below 133. Tiffany wanted above 130. Plenty of wiggle room there. I think they'll be able to hash that out pretty quickly. Agree to the deal, and let's move on from this, because I think ultimately LVMH and its CEO, Bernardino, still want Tiffany. What they saw here was an opportunity to buy the company at a slightly discounted price because of external factors. Now, personally, I think that's a little bit unethical, but I mean, it's sound business practice. It's logical. If you're offered a way to save that kind of money, the business is less desirable now, in all fairness. But I'm a big believer, if you want to buy it in a boom, you want to buy it in a bust. I mean, if you don't want to buy it in a bust, then you shouldn't be buying it in a boom. That's the opinion I would take. Obviously, that's not the opinion everyone takes. It's just personal. But yeah, this has been a good strategy for LVMH. But I think Tiffany has surprised in their, strong defense, in their desire to not renegotiate too much or not come across as the weaker party. The immediate suits, I think, might have caught LVMH off guard a little bit. But now they're back at the table. I think it's pretty likely that they'll get a deal. I think LVMH still wants this business. It gives them a good outpost in the US. It extends and expands their jewelry offering. And it's just a world-famous brand name. And a US one at that. I mean, it's a really solid business, a really good company, and that's what they're looking for. As I said, it got very heated. There were claims that, coronavirus has massively done to the business. Obviously, it's not been great for luxury businesses, for LVMH or for Tiffany, but there has been some positives on LVMH side from demand in Asia recently. What I'd say from this is, if we look at the stock price, so when I did that original video around here, it was the 10th, 11th, 14th September around here. I think the actual day was the 14th. That weekend was the video. So if you bought on the Monday, you'd be looking at a price of around $113. And we're now up today, as of today, you'd be up 13.86%. Obviously, that's not, a ridiculous return. But in 6 weeks, on something that I think was, to be honest, pretty risk-free, especially if you're taking the arb play, buying one, shorting the other, depending on whether you think the deal's going to go through or not go through. I think this was a good play. This would have got you a little bit of cash, a nice return in a small period of time. And as I said, it was a fairly high probability that it was going to go through. But this really wasn't about cancelling the deal, it was about renegotiating. And that's where they are, that's where they got to. And that, I think, was predictable. So yeah, these are the kind of plays that I like to look for. I think it's really interesting, really fascinating. And I think my desired play would have been long Tiffany, short LVMH. And I think, I know that would have been really profitable. So you would have made money, as I said, around the 13% for Tiffany, on the Tiffany stock, nearly 14. And then you also would have made a very small amount of money on shorting LVMH. So again, if we look at Monday, the 14th of September, it's down about 0.33%. Obviously, a very small amount. But again, that play's just worked out well. You haven't lost money there. I think, it would have been a good trade. As I said, my reasons for not taking it were based on not looking for those short-term plays, not wanting capital tied up in that kind of thing. But interesting to hypothesize about, theorize on, create strategies and investment ideas around them. I think these events are sometimes common. Obviously, they're not always mergers or things like that, but these kind of things that you can trade on short-term are common. I mean, for instance, you've got the US election in a few days, less than a week at this point. You could be investing on that. Obviously, at some point, you move away from investing and towards gambling. But if you are investing for the right reasons, if you're looking at the data, looking at probabilities of success, and you're balancing that, especially if you're looking at some sort of arb play where you're going long and short, where there's less downside, I think that's a really solid idea. So yeah, as usual, I'm not a financial advisor. This is not financial advice. This is just me running through my thoughts, my strategies, my ideas. You should do your own research and form your own opinions before investing. Thank you very much for watching and listening. Please leave your feedback, like and subscribe if you enjoyed. And yeah, thank you very much. See you next time.